Welcome back to DINAR Community. What's unfolding before our eyes in 2025 is not rumor, not hype, it's verified, real-world transformation. The long-speculated revaluation of the Vietnamese dong (VND) has crossed the line from theory into tangible financial execution. This marks one of the most significant monetary events of the decade. Meanwhile, Iraq's economic resurgence, carefully orchestrated by the Central Bank of Iraq (CBI) with behind-the-scenes guidance from the U.S. Treasury, has been called one of the most strategically planned financial restructurings in modern history. From the wreckage of 2003, Iraq has slowly rebuilt its economy, not by chance, but through a managed recovery built on geopolitical foresight. By 2024, Iraq began steering away from U.S. dollar dependence in its trade agreements, opting instead for multi-currency deals and digital payment infrastructure. Alongside this pivot, Iraq reinforced its anti-money laundering efforts and tightened financial regulations to satisfy global standards, particularly those set by the IMF and the Financial Action Task Force (FATF). This led to Iraq's removal from financial blacklists, reigniting global confidence in the Iraqi dinar (IQD). At the heart of this transformation is Washington's strategic influence, not just to rebuild Iraq, but to ensure its financial independence also serves U.S. geopolitical goals. As IQD trading quietly reappears on global currency platforms, the question arises, is this Iraq reclaiming its sovereignty, or a carefully crafted move to re-anchor Middle East liquidity to the Western financial system? While official statements from Baghdad and Washington are reserved, behind the scenes tells another story. Private financial briefings and closed-door consultations confirm the active involvement of former Federal Reserve planners, U.S. Treasury personnel, IMF officials, and global banking executives. These weren't ceremonial discussions, they were calculated steps to prepare Iraq's full re-entry into the world's major financial systems. Since late 2023, U.S. financial agencies have aided Iraq in creating sovereign credit structures, streamlining foreign reserve assessments, and opening compliant gateways for international trade. These moves aim to reintroduce the Iraqi dinar as a reliable, tradable asset in the regulated global marketplace. Washington's motives are strategic. As BRICS and other economic blocs promote alternatives to the dollar, securing financial footholds like Iraq becomes essential for preserving American monetary dominance. If the IQD becomes viable in oil markets or connects to major systems like SWIFT or CHIPS, it would significantly extend U.S. leverage in shaping global liquidity. Investors viewing the dinar should understand, this isn't merely a speculative opportunity. It's a calculated play for geopolitical advantage, where currency becomes a tool of influence. Turning to Southeast Asia, Vietnam presents a compelling comparison. Unlike Iraq's energy-focused economy, Vietnam's rise has been rooted in manufacturing, exports, and technological innovation. Once dismissed as an undervalued and exotic currency, the Vietnamese dong (VND) has gained traction thanks to disciplined economic policy. Over the past decade, Vietnam has stabilized its currency, amassed strong foreign reserves, and reduced inflation. These actions paved the way for credit upgrades and deeper global integration. Now, in mid-2025, Tier 1 institutions like HSBC, Citibank, and Standard Chartered are quoting VND at adjusted rates, signaling recognition of its improved value. But this didn't happen in isolation. Washington has supported Vietnam's economic development through trade agreements, defense partnerships, and investments in emerging technology sectors. These efforts are part of a broader Western strategy to keep Vietnam aligned economically as a counterbalance to China's regional expansion. Today, hedge funds, sovereign wealth entities, and elite private investors are quietly positioning themselves around the VND. This is no longer just a currency play, it's a move within a wider strategy of regional influence. If the IMF adds VND to its special drawing rights (SDR) basket later this year, the currency could be elevated to a global semi-reserve status. Meanwhile, Zimbabwe is attempting something even more revolutionary. Known for past hyperinflation and instability, Zimbabwe in 2025 launched the ZiG, short for Zimbabwe Gold, a new currency explicitly backed by verified national gold reserves. Unlike past efforts, this rollout has been independently audited, giving it rare legitimacy. While Western media remains skeptical, U.S. policy experts are watching closely. If Zimbabwe proves that a commodity-backed currency can function reliably in global trade, it could inspire other resource-rich nations to explore similar models, potentially shaking up IMF-dominated systems. So far, the U.S. response has been silence, possibly a calculated wait-and-see approach. If the ZIG succeeds, Washington could choose to support or shape future developments, especially in African nations pursuing reforms and transparency. For those watching the Zimbabwean dollar (ZWL) this year is pivotal. Adoption of the ZIG for regional trade, supported by disciplined gold management, could reposition Zimbabwe from a financial outcast to a regional anchor. And if the U.S. offers strategic support, as it has in Iraq and Vietnam, it could trigger a new wave of investor interest. Zooming out, what we're witnessing isn't fringe theory anymore. Global institutions including J.P. Morgan, UBS, and other major banks are issuing research notes and internal advisories regarding IQD and VND. Hedge funds and family offices are slowly building exposure, while publicly staying quiet. As of June 2025, live Forex tracking shows IQD trading against USD, EUR, and GBP on select ECN platforms, reaching test levels around 5.21. VND has been seen at 3.95 in major financial centers such as Singapore and Dubai. Despite growing activity, both retail and institutional investors are being urged to remain measured. Why? Because while these currency revaluations are indeed unfolding, they haven't yet reached full global activation. What's missing is the geopolitical trigger, Washington's formal endorsement. Experts agree, these aren't mere national monetary reforms. They're steps in a coordinated recalibration of global currency systems, subtly aligned with Western economic frameworks. Dr. Simon Blackwell, a former IMF advisor, stated it best, this isn't monetary rebellion, it's strategic recalibration aligned with Western norms. Similarly, Gulf-based economist Donna Hassan has noted Iraq's transformation from a speculative bet to a structured asset with deepening fundamentals. Even voices from the decentralized finance world are taking notice. Blockchain strategist Ethan Reyes believes Zimbabwe's gold-backed model could blend with future digital FX markets, merging traditional commodities with tokenized assets. In short, these currency stories are no longer about fringe opportunities. They are test cases for the next generation of global financial infrastructure. Revaluation is no longer a dream, it's a reality waiting for geopolitical validation. Looking ahead to late 2025, Iraqi dinar IQD may achieve full global tradability by Q3 or Q4, potentially stabilizing between $5 and $7.50, especially if tied to oil contracts and energy-based trade. Vietnamese dong VND is expected to see a more gradual rise, with projections between $3.25 and $4.05, depending on continued export growth and a potential SDR basket inclusion. Zimbabwe's ZIG remains a high-risk, high-reward proposition. Success will hinge on effective gold reserve audits, acceptance across African trade alliances, and potential use in international remittance flows. But one theme continues to dominate: U.S. foreign policy. If Washington backs any of these currencies for global settlements, investor momentum will shift dramatically. When looked at individually, Iraq, Vietnam, and Zimbabwe may seem like isolated efforts. But viewed through the lens of geopolitics, they form a larger pattern, a Western-led monetary restructuring aimed at countering rising alternatives like BRICS. Iraq offers the U.S. renewed influence in oil-rich corridors. Vietnam provides a Southeast Asian buffer against China. Zimbabwe could become the testbed for gold-based alternatives outside IMF orthodoxy. Investors holding IQD, VND, or ZIG aren't just betting on currencies, they're engaging with a broader strategic narrative. A geopolitical chessboard is being reset. The revaluation game is no longer about exchange rates alone, it's about who steers the future flow of global value. And for now, the United States is still holding most of the cards. Like and subscribe for more videos.